Every financial crisis looks sudden. One day, everything feels stable. Markets are calm, headlines are quiet, and people believe the system is under control. And then, almost overnight, everything collapses. Stocks crash, banks freeze, companies fail. Panic spreads faster than the truth. But here's the part most people never see. Money always knows the crisis is coming. Long before the headlines, long before the fear, long before ordinary people feel the pain, money moves. It disappears quietly, strategically, without emotion. So, the real question isn't whether another crisis will happen. The real question is, where does money hide before everything collapses? Throughout history, every major crisis has followed the same invisible pattern. Panic at the bottom, confusion in the middle, and silence at the top. When markets fall, media shows empty wallets, lost jobs, and falling prices. But what they don't show is what happened months, sometimes years earlier. Because before every crisis, money relocates. Money has no loyalty. It has no morals, no nationality, no ideology. It doesn't care about governments, promises, or people. It only cares about survival. Humans hope. Money calculates. When warning signs appear, rising debt, slowing growth, unstable politics, excessive speculation, money doesn't argue or wait for confirmation. It prepares. The first place money hides is also the least exciting one: cash. Not because cash grows, but because cash waits. Before every major crash, large investors reduce risk. They sell volatile assets, they increase liquidity, they move into short-term instruments and cash equivalents. Why? Because during a crisis, liquidity becomes power. In 2008, while the public was still buying houses and believing prices could never fall, institutions were quietly building cash positions. And when everything collapsed, they didn't panic. They shopped. Crises don't destroy wealth. They transfer it from those who react late to those who prepared early. Another classic hiding place is government debt. Treasury bonds are often called risk-free, not because governments are financially responsible, but because they can print money. Before crises, capital floods into bonds, not for profit, but for protection. Large funds accept low yields in exchange for stability. But this safety is an illusion. When everyone runs to the same shelter, that shelter becomes fragile. Excessive debt doesn't remove risk, it delays it. Eventually, the bill arrives. Then there is gold. Gold doesn't promise growth. It pays no interest. It generates no cash flow. It simply exists. And that's exactly why money trusts it. Gold performs best when trust collapses. Trust in currencies, trust in banks, trust in governments. Before crises, gold accumulation quietly increases, not because of headlines, but because of central banks. When institutions that control global money start buying an asset that produces nothing, that's not speculation, that's preparation. Real estate is another misunderstood hiding place. Not all property protects wealth. Most people buy the wrong kind. Before crashes, smart money exits speculative real estate, overpriced housing, leveraged projects, emotional purchases. Instead, it moves into strategic property, assets with stable cash flow, essential use, prime locations. Housing bubbles burst, infrastructure survives. That's why institutions don't buy dreams. They buy boring assets that society can't function without. While the public focuses on stock markets, the largest movements happen out of sight. Private equity, private credit, structured deals. These markets don't react to panic. They wait for it.
Crises create forced sellers. Forced sellers create discounts. That's where silent money hides, away from headlines, away from emotion, away from fear. Some believe crypto is where money hides before a crisis. Others believe it's where money disappears. The truth is more complex. Crypto doesn't behave like gold. It behaves like belief. When trust in institutions weakens, crypto benefits. When liquidity dries up, crypto suffers. That's why before crises, crypto often rises, and during crises, it crashes. Money doesn't hide in narratives. It hides in control. But the most valuable asset before any crisis isn't cash, gold, real estate, or crypto. It's information, access, timing, insight. Those closest to the system see stress fractures early. They notice liquidity tightening. They see leverage breaking. They hear silence where reassurance used to be. And they act before explanations exist. By the time the story reaches the public, the money has already moved. Crises don't surprise markets. They surprise people. Money doesn't panic. It prepares. And the reason most people lose during crises isn't bad luck, it's bad timing. They move when fear is loud. Money moves when fear is silent. The next crisis won't announce itself. There will be no countdown, no warning alarm. But the money already knows. The only question is whether you'll notice where it's going before it's too late.